In this video, I want to talk about whether or not Tesla is going to do a secondary fundraise, and if they do, how it's going to affect the share price. So I was on Twitter, and if you guys don't follow Tesla Facts on Twitter already, it's at truth_Tesla. Definitely a must follow if you follow the stock. But in my opinion, I think Elon has been giving a lot of hints pointing at a secondary fundraise that's about to happen. And I have a couple different reasons and just conspiracies as to why I think that is. But I kind of wanted to get into a little bit more of the dynamics of if they did do it, what would that tangibly look like for the stock by looking at number one, Facebook's SEC filings from when they joined the S&P 500 and they issued new shares, but also what it would look like just tangibly for the stock price and really how investors would compensate for that. So I think the first thing that you have to realize here is what is Elon's biggest mission? Someone that follows Tesla knows that Elon's and Tesla's number one mission is to drive more sustainable energy throughout the world and to have the world dominated by sustainable energy. Bar none, that is kind of the goal. It's not like, hey, how can we maximize profits? Not like how can we get as many Tesla units out there, although that might be a derivative of the goal. But the goal is how can we accelerate the world's transition to sustainable energy, right? If you've been following Tesla for even 5 minutes, you know that, okay? So with that in mind, you have to realize and you have to think through that lens. You have to go, okay, if that is the goal that Elon has, if Tesla has, and he says in every single meeting, does fundraising at a point where your stock is valued at $600 billion when it's doing 33, $34 billion of top line revenue per year, massively overvalued? And by the way, I'm a Tesla bull. I have a lot of calls, I have stocks. I'm in it to win it for sure. I haven't sold anything yet, but when you know that the fundamentals have been far, far surpassed by the stock price, is it not in your best interest to raise money to really solidify that cash account? So I think the first thing I want to do is I want to go into Yahoo Finance. And in Yahoo Finance, I want to kind of just pull up Tesla stock here and just see. Let me try to pull it up here. But I want to pull up Yahoo Finance because I want to see how much cash they have on hand. So if we go to the balance sheet, let's check it out here. So balance sheet, total cash and cash equivalents. That's what I want to look at. Total assets. Let's open up this line here. So current assets, Tesla has about 12 billion as of last check. And this could probably be off. I think honestly, I think they have closer to 15 after they raise some money. I could be missing a line item or something. I don't really use Yahoo Finance, but let's see here. Yeah, okay. I mean, let's call it 10 to 15 billion dollars of cash. A gigafactory costs $5 billion, give or take around that. So if you know a gigafactory costs around $5 billion to make, you would go, okay, well, they can build three gigafactories for this price. Plus, they're not burning cash on their operating income. They have a 23% automotive gross margin, excluding credits. They're obviously investing a ton of money into resources and to just capex. So they're not burning money. If anything, they may be scraping and adding a couple billion per quarter or something, right? If it's a really good quarter, right? So the question here is, but what could Tesla do if they raised, let's pull this out of thin air, and let's say out of the 120 million shares for $70 billion, 70 something billion dollars that S&P index funds have to buy, what if they raised half of that and they issued 60 million shares to raise $35 billion? $35 billion. Now, I know debt is cheap. I know everyone talks about how they're better off just not raising money, and they're better off just loaning money with financing, with debt at a 1%, whatever it might be. But I think there's something to recession proofing, bottom lining, padding your business. As a business owner, I can speak to this, not on the same scale, but having that money in your bank and knowing that, if things come up, if salaries, if all of a sudden, we want to hire 10,000 more people to build this project, like Uber, we want to build the next Uber, the Tesla network or whatever it is, you need money for that, right? And 10 to 15 billion dollars doesn't do much. Padding yourself in a scenario where, to be honest, if they raised 35, let's say if they raised $70 billion, if they raised $70 billion, the entire amount that the index funds have to pour into Tesla in the next couple of weeks here, wow. Like, just think about how recession proof, how this would be a boomer stock, right? Tesla would now become a boomer stock. They would have $85 billion on their balance sheet in cash or cash equivalents. Think about how, like, mergers, acquisitions are easier. Obviously, they can just issue stock to do mergers and but having $85 billion on the balance sheet, that's just a game changer. Okay. So, in my opinion, I think there's a very high likelihood that Elon and Tesla are going to raise some money in the next couple of weeks. When, I don't know. Now, back to Twitter. Tesla Facts correctly has pointed out that Facebook actually did a secondary just the day before inclusion to about 3.5% dilution. Okay, so they issued 70 million shares. And share by share, there's no comparison here. If Tesla were to do a 3.5% dilution off 600 billion, that would be, I'm just calculating this, that would be a $21 billion raise. Okay, a $21 billion raise. Here's the SEC filing. So Tesla Facts pulls that out. Here's the trading flow of what happened with Facebook when they operated it. Note how, and this is him saying, note how remarkably muted the market reaction was to 3.5% dilution. No volume spike, and the dip was mostly reversed intraday. That's powerful stuff. You can raise $31 billion and not have a major, massive, huge effect to your stock price. That's nuts. You just put $31 billion on your balance sheet. Almost as if big players knew it was going to happen. Okay, and he pulls up a graph here. And at this point is where the secondary was announced, and $54 was the price of Facebook when it entered the S&P. Also note how the price of secondary offering was initially closer to $55, but this was then reduced to $55.05. Very close to the closing price the next day when in the crossing passive index funds bought 50 million plus shares for 55 on the record volume. I.e., even though this was not spelled out in the SEC filing, the purpose of the secondary offer was to ease liquidity constraints during the S&P inclusion by printing new Facebook shares to the most affected banks, who flipped these to the passive index funds the next day. This equity round, just one day before S&P 500 inclusion, probably surprised some of the less connected index arbitrage funds who might have bought too many Facebook shares for the event, aka front running, which is what we're seeing now in Tesla stock. Tesla's up to $641 at the close today. This might have led to a minor 7% dip or correction in the week after inclusion. Last tweet, what relevance does this have to Tesla's inclusion? The difference is that a secondary Tesla offering is not currently expected, obviously, but like I'm telling you, there's a chance to. Without new shares, the week of the 18th, next week, might show more Tesla volatility than the flat Facebook event. A bonus tweet. Also, a correction and dip after the inclusion might also depend on whether there's over speculation or under speculation. During the Facebook event, the last-minute printing of 70 million shares guaranteed a correction. Without a secondary, it's unclear whether Tesla would do the same. Meaning, in S&P inclusion, let's say, so S&P inclusion is effective the morning trading of Monday, December 21, which means they're going to be adding the shares on the Friday, the 18th, after hours at the crossing price. meaning the price it closed at and the price they're going to be adding the shares. There's some sort of magic that goes on behind the scenes. There's a Nasdaq paper that you can read about crossing selling price if you want more information about that. But I don't even fully understand it. But the point here is he's saying the last minute printing of the shares guaranteed there was going to be a correction, meaning all of a sudden, all those front runners that were running Facebook stocks up for probably, I think, a week and a half to 2 weeks before when the inclusion was announced to when it was effective, all the people that were front running, after they printed all of the shares that the S&P index funds needed, all of a sudden those front runners sold off, and that led to a 7% correction. Okay, a 7% correction. Looking at some of the replies here, also nice to know that a secondary would likely come in the 11th hour. And Tesla Facts replies, this is not given at all. It was likely, in my opinion, that the S&P Index Committee coordinated with Facebook to ensure a secondary and announced inclusion on that condition. Tesla didn't mind that they got snubbed in September, and in November, S&P had no choice but to add. Now this makes it spicy, right? Like now I'm getting excited because that $5 billion raise that they did in September, that they never said what they were actually raising that money for. It was a little bit weird, and they still to this day haven't said why they actually raised it. Makes me think maybe they went through all the paperwork of actually like getting something to be, putting together a round to raise, and then the last minute S&P said, no, we're not putting you in, so they did a small $5 billion raise, right? Because I think Tesla was at I want to say between a 300 something billion dollar market cap. So 5% wasn't a lot, right? Or a $5 billion raise wasn't a lot, relatively speaking. Now, is it possible that Elon is hyper sensitive to getting snubbed and is not going to raise? Again, going back to the motto, and the motto is the whole point of Tesla is to accelerate the use of sustainable energy. Having $70 billion or a derivative of, let's say, $40 billion, $30 billion, $20 billion raise done, where the stock price only suffers, I would say a couple percent, 7% at most, 10% if you're really like overdoing it. Like that's just such a good trade-off. You can use that money now to actually fund SpaceX or fund this project or that project. But more so, what I think actually is kind of likely is instead of issuing new shares, I believe there's a good percentage chance, and hear me out, I would probably put my personal percentage at 55%, that Elon is actually going to liquidate some of his shares during or before this inclusion event. The fact that he can sell at this high of a valuation and use that money for personal projects like Starlink or SpaceX or insert project that Elon is working on, AI related, let's say, it's just if his whole goal is to accelerate sustainable energy, this is a move he makes, and it only comes at the cost of pissing us off and getting about 10%, 15% knocked out of your stock price. So I really believe that there's a good chance this will happen. There's also a good chance that we look back on this video and none of this happened. But I think it's important to realize that this is definitely a possibility. And if you're not paying attention to this actually happening, then you're putting your blinders on, right? And that's always, as an investor, that's a little bit dangerous. So keep everything open. There's a percentage chance of anything happening, anything. So keep that in mind. Don't bag hold. Don't have diamond hands. Be smart. Be rational with your money, with your trades. And yes, by the way, I sold my call that I had expiring this week from $11. I sold it at $35. Interactive Brokers was open for 5 minutes today. Pissed me off, but still got those March calls, and we'll hold on to those. All right, guys, hopefully that was insightful, and appreciate any sort of liking, comment, subscribe, just mostly commenting. Like I really want to hear what you guys think about this. All right.